Alright, today is February 20th, 2026. This is the trade recap, more of a market recap because I did not end up taking trades. I didn't end up taking anything today, but that's exactly what we're going to go into and explain why I didn't take any trades and what would I have wanted to see in order to take a trade to the desired draw in liquidity. So going straight into it, our main draws in liquidity today were previous day lows, London highs, previous day highs, and some smaller ones. This 15-minute high within the hourly gap, and these 15-minute lows. So just to kind of give you a summary of what happened, when market opened, we already took out these previous day lows, right? And so I realized by going on the 4-hour time frame that these previous day lows are once again in this 4-hour bullish fair value gap, which we've been mitigating and rejecting through the entirety of this week, which is kind of annoying, but it is what it is. So it's a high resistance strong liquidity, meaning price is more probable to be very reactive after manipulating such lows. Now, going to market open, I didn't really have a bias. I could have seen price go both ways. I could have seen the market come down, taking out these lows and the weekly lows, and I could have also seen market come up into this hourly gap and maybe passed into the London highs, which we clearly did. But as soon as market opened, since we already took out the high resistance previously lows, market shot up into this hourly gap. We took out these 15-minute highs and we continued to go higher. Now, I wasn't looking to take a trade past or before 9:45 because at 9:45 we did have red folder news. So, and there wasn't really anything to trade off of before 9:45, so I kept that in mind and I was just being patient and seeing how the market unfolds, right? And so 9:45 happened, and then really didn't really have much of a strong bias until the 10 a.m. candle opened. But at the 10 a.m. candle, we got to see on the 4-hour that we once again took out the high resistance lows and rejected the gap, right? And the rejection shows or gives us really good insight as to where market wants to go, and that's exactly what it did. So we saw the market rejected this 4-hour gap, and we almost inversed this 1-hour gap entirely. And so I was then bullish and looking for a bullish entry. And so what I was looking for was a continuation trade off of the confluences that we had built up from this large leg up. So I was looking to tap into a fair value gap, either a 15-minute or even a 5-minute fair value gap, and then which would be into equilibrium, and then take a trade all the way to London highs or even previous day highs. Now the entry that I was going to take but didn't last minute was this 3-minute inversion. So market opened, we shot up, chopped around, 9:45 happened, didn't really get much reaction off the news except come closer to London highs. And then we just kind of chopped around on the 1-minute time frame. On the 3-minute, you can see you're just not really having much displacement. And then as soon as 10 a.m. was about to open, there was a 3-minute gap. I was looking for us to inverse, and unfortunately, we didn't inverse it, but instead we just closed right in the middle of it. And then as soon as 10:01 happened or 10:02, we had like a 135-point candle that just took out all the draws in the liquidity to the upside that I wanted to see get taken out, London highs and previous highs. And so from there, wasn't looking to take any other trades. But the reason why I wanted to take this 3-minute IVG setup, and the reason why a lot of people wouldn't have, is because it didn't tap into any sort of fair value gap, right? So we're pretty overextended. We formed the 15-minute bearish, 15-minute bullish fair value gap as the 10 a.m. candle opened, and we also had this 5-minute candle. Ideally, we would have wanted to see price come down into equilibrium and into this 5-minute candle, retest, and then continue to trade off of that to draw some liquidity. But for me, just off of experience, I wasn't really looking, or I didn't really set the condition for it to tap into this gap and then reverse. I was okay with it coming down and retracing a little bit because we didn't really take out a key draw on liquidity. Right? We had this 15-minute high. Yeah, cool. But like at the same time, it's not the strongest strong liquidity, and so it wouldn't require price to come down deep, to come down and have a deep retrace before going back up. So I was totally okay with having this kind of retrace, and then as you can see, price just continued to go higher, and we didn't really need to retest this 15-minute breakaway gap that formed, or the 5-minute gap that formed before moving higher. And yeah, So I was still on the charts after that Drake candle appeared, taking out all the draws to the upside to see if I can take a draw or take a trade to the downside to the untapped 15-minute gap over here. Unfortunately, there was an entry as well. But the reason why I want to see for an entry trade to that 15-minute gap is because, once again, if you go in the higher time frame, you can see all these draws in liquidity that were taken out, previously high and London high. These are all in high time frame gaps. So the hourly gap and a 4-hour gap, right? So these, if manipulated, price is more probable to reverse or show a reaction off of them, and that's why I was looking for that trade. Nothing really happened. Ended up chopping around, and then at 11 o'clock, we're still chopping around on the higher time frame. It's unfortunate, last trading day of the week, but it is what it is. That's just my thoughts going into market open and the trade I wanted to take. And yeah.